Hi, I'm Margie Remmers-Davis with Crystal Clear Cashflow, creator of the fast and easy way to QuickBooks Online Pro Advisor certification. I am so excited to announce that I have recently started a free Facebook group to help you get more hands-on practice in QuickBooks Online. I have trained thousands of people to help get their certification, their basic, advanced, and payroll level certifications. And the number one thing I hear from people is that, yes, I have the certification, that's great, but I need more hands-on practice so that I can feel confident actually using QuickBooks Online and going out and get clients. And so that's what this Facebook group is. So you can join the Facebook group. We have a live stream every week. You get to vote on what exercises you want to work on, you want to see me walk through during the live stream, and it is a great place for us to just get together to work out and get those exercises done so you can get that practice using QuickBooks Online. The link is down below, and after this you'll be able to get a sneak peek into our live stream that we held just this last week covering some basic level topics. I can't wait to see you in there. See you soon. So, as you know, I'm so delighted that you could be here, and I'm so excited for this opportunity to kind of walk through these exercises with you. So what we're going to do is thank you for those of you who voted this week on the top exercises that you wanted to see for us to cover. Far and away, almost double what everybody asked for, all of the other exercises, is the money in, or the workflows, the proper workflows, because I think there's always some confusion. We say all the time, well, if you don't do it right, you're going to get double income, or you're going to get, if you get double income, or if you do it wrong, you'll have double expenses. And so, you know, we just kind of take that on face value. And sometimes we don't actually see how that happens in QuickBooks. So that's what we're going to do first, the proper workflows. And as I was working on this, I realized I needed two separate exercises, one for money in and one for money out. So the first one we're going to go over is the money in workflow. And you guys should all have a copy of it. I am posting it in the chat in case you don't. All you have to do is click on that link and you'll be able to follow along. This exercise, most of our exercises do start in the sample company. A handful of them don't, because you can't do it in the sample company. But most of them do, so this one does. We're going to start in the sample company. And here is the first situation. So our first scenario is Craig recently did 5 hours of custom design work for WiseCop Consulting and sent them an invoice. He just received a check from them for $375, so he deposited into the bank and used a deposit transaction. Yay, Craig, for knowing how to use a deposit transaction. But the problem is that this workflow was incorrect because he didn't connect it to that WiseCop invoice. So let's see what happened. And so we're going to go to step one. We're going to first take a look at the balance sheet to see how the current invoice is reflected there. So I'm going to go over to my sample company. I'm going to click reports. And then right there we have balance sheet. Okay, so this is our balance sheet. And then we're going to go to step two. Because the invoice has not yet been paid, and because Craig is using accrual accounting, the $375 is already considered income. This is really important. If you're brand new starting out, you may not understand the difference between accrual and cash basis accounting quite yet. But in accrual-based accounting, when you send out the invoice, that's automatically included as income, even if you haven't received the check. So that's what I just said here. To see this, you're going to go to the accounts receivable, which is the AR total, which is right here, and we're going to click on it. So we're going to go right here. Here is that. Oh, let me turn on my highlighter here. So we've got a better, there we go, turn that on. All right, here we go. So we're going to go to accounts receivable right here. And on any of these reports, you can click the number and it will give you a list of all of the transactions that are included in that number. So I'm going to click that number. Okay, and here's our list of transactions. So going back to the exercise, now we're on step 3. Okay, scroll through the report to find the WiseCop Consulting outstanding invoice. Okay, so I'm going to scroll through, and here is that WiseCop Consulting invoice. Okay, so it's $375. You could, if you were a little bit more advanced, you could just filter out and only show the WiseCop. You could or sort this report easier, but for our purposes now, we found it right here. It's WiseCop Consulting. So we know that that's included in that accounts receivable total. So going back to our exercise, this note down here is just what I just said. You could filter it by customer if you wanted to. So going to step 4, we're going to go back to the report summary to return to the balance sheet. So I'm going to click that, scroll back up a little bit here, back to report summary. So remember, this is now the transaction report. This is the total number of transactions that were included in that one number back on our balance sheet. Okay, so now we're back on our balance sheet. We're going to go to step 5. Note the balance of the checking account, accounts receivable, and total assets. Okay, so we're going to take a look at here. We have our checking account is 1201, our accounts receivable 5281.52, and then our total assets 23,436.29. The reason I want you to note that is because it's going to change in just a minute when we get further in this exercise. Okay. So now we are in step 6. We're going to duplicate Craig's incorrect error and see what happens. Okay, so we're going to click plus new and select bank deposit, plus new, and bank deposit is over here. And steps 7 and 8. So now under add funds to this deposit, enter WiseCop Consulting. So under here, add funds to this deposit. I'm going to say it's WiseCop Consulting. That's who I got the check from. So of course, Craig thinks, well, I'm saying that it's WiseCop Consulting. Now notice that I'm getting a little pop-up message here that says, hey, you know, you have an open invoice right here. So are you sure you don't want to apply this to the open invoice? Well, actually you do, but in this instance, what we're doing is we're duplicating Craig's incorrect workflow. So we're going to say he ignored that, and maybe earlier he had pressed this, so he actually doesn't get this pop-up. But we're just going to close that. So, so we entered, so that's this. The note here is talking about these things up here. These things up here are what are in undeposited funds. So if you've learned about that yet, this is if you were going to make a deposit, you would take those things from undeposited funds. That's what this is up here. But for the purposes of this exercise, we're just using this add funds to the deposit. So next step is step 9. Okay, so we're going to indicate design income as the account. We're going to say check was the payment, 375 is the amount, and then we're going to click the arrow in the green button to select save and close. So right here, so let's go do that. Design income, we're going to say it was a check, we're going to say it was $375, and we're going to save and close. Okay, so account is design income. Payment method is check. The amount is $375, if I can type here. So you can see how Craig could easily make this mistake, right? Because it feels like he's doing the right thing. He's connecting it to Weiskopf Consulting, right? So it looks good. So we're going to hit the green arrow. We're going to click save and close. And then we're going to look at this balance sheet, but let's go back to our exercise. Okay. So now we're going to be on step 10. Notice what happened to the items in the balance sheet. The checking account balance went up by $375. We just deposited $375 into the checking account. The accounts receivable balance stayed the same, and the total assets went up $375. Okay, so let's look at that here. Here's the checking account. It was 1201. Now we're at 1576. Accounts receivable stayed the same, and now our assets went up. This is how you create duplicate income, is because now you still are considering that invoice, because that invoice hasn't been marked as paid. You think of that as income, and then you also have the income that went into the bank. So that's how you end up with duplicate income. Okay, so we're going to go to step 11. We're now going to delete the deposit that we just did. In a real life scenario, of course, if you make a mistake, you always want to void, not delete. This is just for the purposes of this exercise. We're going to undo what we did and see, we're going to make a mistake another way. Okay, so we're going to go back to that balance account, or the balance sheet. We're going to click the checking account total this time. Okay, remember, anytime you click the total on a report, it'll show you all of the transactions that are included in that total. So if I click the total, then I can find the check that I just deposited, which I think should be the very last one right here. Okay, so that's that check that I just deposited. And so that was that step. Now, step 12, we scrolled to the bottom, and now we're going to click deposit because we want to open up that deposit. And then we're going to delete it. And here are the steps. Last one, step 13, the way we delete it. Click more in the black bar, select delete, and then click yes to confirm. Okay, so we're going to click more, then click delete, and then click yes to confirm. Okay, so now that is gone. And when I click go back to report summary, you'll see that we're back to the way we were before. Okay, so let's see another type of mistake that Craig could make. Okay, so this is going to be scenario number 2. You have successfully demonstrated to Craig that he shouldn't use the deposit transaction for the check he received from Weiskopf, but now he thinks he should use a check transaction. I mean, it's a check, right? Well, this is also wrong, and we're going to see why. Okay, so steps 1 and 2, go back to the balance sheet, which I already did here. Then let's see, now we're going to let's look again at the balance of the checking account, accounts receivable, and total assets. Okay, so this is the same as what we did in the previous step. The checking account, 1201, accounts receivable, 1582, or 15, you can read the number. And then here's the total assets. Okay, so now we're looking at that, and then we're going to go to step 3. Let's see what happens if we use a check transaction. So we're going to click plus new and select check. Plus new, select check. Okay. All right, so here we are in our check. Step 4, we're going to enter Weiskopf Consulting as the payee, design income as the category, and $375 as the amount. Now, you might be thinking to yourself, because you are a very smart bookkeeper, well, Weiskopf Consulting isn't the payee. but this is Craig making this mistake, right? So this is Craig. So we're going to go here. We're going to say Wise Cup Consulting is the payee. And let's see, what else did I say? Design income as the category. Design income. And $375 as the amount. And then we're going to click Save and Close. All right, going back to our exercise. This is kind of fun, actually, that I can see some of you actually working on your computer. I love that. I love that you're doing this with me. That's the whole point of getting together to work out. Carlos says you're going to post this recording in the group. Yes, I am. All right. So where were we? Okay. Step 4 is, all right, we just did that. So now we're on step 5. Okay. So notice what happened to the balance items in the balance sheet. Now the checking account went down by $375. Okay. So we just received a check from Wise Cup Consulting, but what happened is we now took money away. So the checking account went down $326, okay, instead of going up like it should. Still no effect on the accounts receivable. So we've still got that income. So now actually it has zeroed that out because it went down in one, it went up in the other, and that means it was the net effect was 0. And then the total assets also went down by $375. Again, the same problem, because even though we received the money, it actually reflected, by doing this wrong, it made it look like we have less money. Okay, that's because the check is an expense. In QuickBooks Online, this is important for you to help your clients understand. A check is an expense. It's basically the same as a sales receipt on the other side, where it's payment at the same time. A check is payment at the same time. Okay, so we're going to talk in the next exercise about workflow out, then or money out. We're going to talk about that in the next exercise, but it's important to get those two terms right. So step 6, now we're going to delete that deposit. Or delete, I said delete that deposit. That's a typo. I need to fix that. We're going to delete that check. Okay, so we're going to do the same thing we did before. We're going to go to checking. And now instead of a deposit to delete, we have a check to delete. I'm going to click check, click more, delete, say yes. Okay. And remember, you always want to avoid as a bookkeeper. You don't want to delete, only except in certain circumstances. Okay, so now I'm going to go back, and here we are back where we started. So let's talk about the best way to do that. And let me just make sure Joel is on and I can give him assignments. Joel, yes, Joel is on. So Joel, would you please make a note for me to remember to update this typo in the money in workflow? Or you know how to type, you know how to fix it. You could just go fix it too. That would be great. All right. So Joel says, no problem. All right. So let's talk about the correct way to do this. Okay. So now here we are in our third scenario for this exercise. Now that Craig understands what not to do with that check from Wise Cup Consulting, let's show him the correct workflow. Okay, so step 1 is to use the receive payment. So we're going to go to plus new, select receive payment, plus new, and receive payment. Then steps 2 through 4, we're going to enter Wise Cup Consulting as the customer. Wise Cop Consulting as the customer. All right, step 3, notice that it automatically pulls up the outstanding invoice. Okay, so that is right here. Look, it says, here's this outstanding invoice. And if they had more than one outstanding invoice, you'd have a whole list of here to choose from that you're receiving the payment for. Okay, if they had one more, okay, so we're going to click the checkbox next to that one right here. We're checking it. That's the one we're paying in this check that we received. Note that the deposit to field says undeposited funds. This is the temporary holding place. I mentioned this before for checks that need to deposit that. We're going to cover that in step 5. So right now, right here, it says undeposited funds. You can think of undeposited funds as kind of like your desk drawer. So if you get a check, this is true for checks and cash. So if you get check or cash, then you like put it in the holding place. You put it in an envelope, or you put it in a desk drawer, and then you take that envelope or what's in your desk drawer, and then you deposit that into the bank. Okay, so that's that temporary holding place. And I don't have my chat open anymore, so I can't see if anyone's asking me any questions. There we go. Okay, all right. So we're going back to the exercise. We still need to save and close right here. All right, so now we have received it. Look at accounts receivable. It went down, okay, because we received the money. This is no longer an invoice that's holding out there, but checking hasn't gone up yet because we haven't deposited into the bank. That's the next step. Let me see if I mentioned that in step 5. Okay, now the invoice has been marked paid, but it hasn't yet been deposited into the bank, okay? In the exercise, I'm not showing you that on the balance sheet, but you know what I'm talking about, right? Okay, so now we're going to click plus new and select bank deposit. Okay, so plus new and bank deposit. This is very familiar. We did this in the incorrect workflow. Remember, the problem that Craig had before was he didn't do that receive payment step. He went right to the bank deposit step. Okay, so here we are in our bank deposit. And remember I said these are all of the items that are in undeposited funds. And here's Wise Cop Consulting right there. There's that check. Okay, let me see what my instructions say here. You should be familiar with this. Okay, we talked about that. We go to step 6. Okay, we talked about that. There we are. So we just are going to check the box, and then we're going to hit save and close. So we're checking the box, and then we're going to hit save and close. And now let's take a look at our balance sheet. So now the accounts receivable has gone down, and the checking account has gone up, because really we just are transferring the money from the one account into the other account. So remember with accrual, it's counted as money even if you haven't actually received the check yet. Okay, and I think that's it for, oops, what else do I have here? Step 7. Now that we have done it correctly, let's take a look at the balance sheet from the left nav bar, click reports and select balance sheet. We were already on there. Can you enlarge your screen? This is almost as big as I can get it. That is as big as I can get it, Veronica. Sorry. All right. So let's see. The balance sheet, notice what happened to the balance sheet. Checking account balance went up by $375. The accounts receivable went down by $375, and the total assets remained the same. This is because it's accrual accounting. It's all of the stuff that I just said. All right, and that's it for our first exercise. What questions do you have for me before we move on to see the money out workflow? Thank you, Jenny. I'm glad this is helpful. Lena has a question. Go ahead and post your question. Lena, did you have a question? Oh, here it goes. For the actual bank deposit, I scan. Okay, let's see. Dun, 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 dun. Okay, going back to, I scan the check and deposit it in the bank account, then do a match on invoice for accounts receivable. Yes, if you're actually depositing it in the bank is different than marking it as a deposit here. So yeah, as long as you're matching it to the accounts receivable, or as long, the key thing is marking that invoice as paid. Okay, using receive payment. You can either use a receive payment like I just showed you with plus new, or you can actually go into the invoice and you can mark it as paid. So yes. All right, so hopefully that answered your question. Let me scroll back a little bit here.
Thank you. Thanks, Margie. Sorry, but so that step about creating a deposit through QuickBooks, you're saying that is essential in order to not throw the books off, because otherwise I will see a different deposit in the amount in the bank and a different in QuickBooks. Is that right?
I'm not sure I followed you. Is this Lena?
Yes, sorry.
Okay.
Sorry.
Okay.
This is Lena.
I was looking to see who was talking.
I'm sorry.
Okay, so you need to mark the invoice as paid. That is the important thing. You need to mark
Yes.
the invoice as paid and then deposit the money. Now, whether you physically deposit the money, the order that you physically deposit the money is different than when you mark in QuickBooks Online that you have deposited the money.
Yes, and what I'm concerned about is I've never done that part, marking in QuickBooks that I have deposited the money. I see it come up on the bank feed when I
Yes,
deposit physically.
Yeah, if you do it through the bank feed, that works too. Yeah, that's
fine.
Oh,
Okay. Thank you. That was my question.
Yeah. Okay. All right. Let's see. Let me go
back.
back.
I'm going to try the deposit through QuickBooks like you showed us.
Okay. Thank you. Good. All right. So let me go back. Somebody else. Dun, dun, dun. Okay. That was Peggy says, so would we still match in the review section? Oh, I think you were asking about the bank feeds. Is that what you were talking about, Peggy?
Yeah. Yes.
Yeah. So that's what I was just talking about with Lena. So yes, you can match it from the bank feed too. But you want to make sure that you're matching it to the payment, right? Not the initial invoice. Okay, let's see. How would you know this is an error looking at the reports? That is an excellent question. I'm going to have to think about that and post that in the group. How would you know this is an error looking at the reports? I guess what comes up for me right away is that your accounts receivable should match your outstanding invoices. So if you have a bunch of invoices that look like they haven't been paid, but they have been paid, then it's probably this step that's missing is marking them. I think that's the answer to your question, is that accounts receivable should be going down as you are collecting the money. So let's talk about money out. So this is going to be the same kind of thing, only instead of our invoices and accounts receivable, it's a similar kind of mistake for paying bills. Okay, so this one only has two different mess ups. Okay, or actually one mess up instead of two mess ups. All right, so let's take a look at our scenario. Craig, oh, it's bigger even for me to see. This is great. Okay. Craig recently had some repairs done on his truck and received a bill for $755 from Diego's Road Warrior Body Shop. He paid the bill with a check. Oh, I need to put this in the chat, don't I? So that you guys all have the link. Everyone in meeting. There we go. You should have gotten that in an email too, but just so you have it. All right. All right, so we are back. Okay. All right, so he paid the bill with a check. So he used a check transaction to record the payment in QBO. This is also incorrect. So let's see what problems I created. Now, I just said in the last exercise that checks are money out, so you shouldn't use them to pay, for WiseCop. So why is this wrong? He paid it with a check, and check is money out. So what's the problem? All right, so step one. Again, we're going to take a look at the balance sheet to see how the current bill is reflected there. Just a quick note for Joel while I'm thinking about it. If you could make a note so that we remember to do the Zoom screen for the next live streams, and also that I remember to turn on my cursor the next time we do a live stream. Okay. So we're going to take a look at the balance sheet again, and I still have mine up here. And step two, okay, because the bill has not yet been paid, and because Craig is using accrual accounting, the $755 is already considered an expense even before he actually pays it. Okay, so this is just the flip side of accounts receivable, accounts payable. When you are doing accrual account, lost my train of thought for a minute. Accrual accounting, that means you're actually counting the money even just when you got the bill, not when you actually paid the bill. So when you got the bill, that's still considered an expense. So again, here we are looking at the accounts payable total now. If I go back to here is my accounts payable total, 1602.67. And just like before, step three, okay, if I click on the amount, then it'll pull up all of the transactions that are in that amount. Okay, so here is accounts payable, 1602.67. All right, and where is it? Where is it? Diego's Road Warrior Body Shop. Here it is, right here. Diego's Road Warrior Body Shop. And it's in the list, and I'm blown up. Here we go, $755. Okay, so there it is. And again, if you wanted to, you could filter this report, customize it to find it easier. But for our purposes, we're just scrolling and looking for it. Okay, so now we're going to step four. I don't want to get ahead of myself. We're going to hit back to report summary. So this is going to take us back to the balance sheet we were just looking at. Okay, so all I did was drill down on the accounts payable number. And then step five, okay, note the balance of the checking account, accounts payable, and total liabilities. Okay, so we're going to look at checking account, still 1201. Actually, this is assuming that I haven't already written that check to WiseCop. All right, accounts payable, 1602.67. And here are our total liabilities, lots of threes and ones, 31, 131, 33. Okay, so that's what we're looking at. And oh, that was the wrong one. Here we are, accounts payable, 1602. Here's my checking account, went up because we just did this right on the heels of depositing that check, so it's different than the picture there. And your total liabilities, where did it go? Here, total liabilities right here, 31, 131, 33. Okay, so that's what we're taking a look at there. Then we're going to go to step 6. Now we're going to duplicate Craig's error and see what happens. So what he did was he hit plus new and selected check, plus new, selected check. Of course, why wouldn't he do this? He was writing a check to Diego, right? So plus new, let's see what else are my steps. Okay, steps 7 through 10. In the payee field, we're going to enter Diego's Road Warrior Body Shop. Diego Road Warrior Body Shop. And look, what happened is a drawer popped up, just like in that last exercise. It says, hey, you know, there's an invoice out there. Do you want to apply this to the invoice? And Craig just ignored it. Here we have, in a different way, this pop up and say, hey, there's a bill out there. Are you writing this check for this bill? And we're going to say, oh, no, thanks for the information. I'm just going to, you know, close that up because Craig's not paying attention. Okay, so note that the drawers, we're going to ignore that. Step 9, maintenance and enter maintenance and repair, equipment repairs as a category, truck repair as the description, and $755 as the price. Okay, I'm just going to type in truck repair. Hello, truck repair. Where did it go? Look at it again. Oh, equipment repairs. That's what it was. Equipment. I can type, guys. No pressure at all when I have all these people watching me. Okay, truck repair. The amount is $755. What else do I need to put here? Okay, $755 is the price, and we're going to click save and close. Save and close. Okay, so now let's see, we're going to go to our next step, step 11. Notice what happened to the items on the balance sheet. The checking account balance went down by $755. The money came out of the account when he wrote the check. That's to be expected, right? So here's our checking account. It went down. The accounts payable balance stayed the same. So that bill is still showing as unpaid because we didn't connect the two. We wrote the check, but we didn't connect it to that bill. And so our accounts payable is exactly the same as what it was before. And now our total, well, the total liabilities are stayed the same, but our total went down when it wasn't supposed to. Is that right? It went, yeah. So it went down when it should have just stayed the same because we have already accounted for that bill. So that's how we have a double expense. We have the expense of the check that's counting against, because it came out of that checking account. And now we have that bill that's still out there showing as accounts payable. So that makes it look like a double expense, like we're double out of money. Okay. All right. So that is bad. That's not what we want to do. All right. This whole thing is what I just explained. All right. Step 12. So now we're going to delete the check. You guys should be pretty familiar with this by now. I'm going to click check, checking account. Here is the one that I just wrote, check. I'm going to notice that I could connect them right now, but we're not going to do that. All right, I'm going to hit more and delete and yes. And of course, my warning also always that in real life, you don't delete. It's better to avoid just so that there's an audit history. But for today, we are deleting because this is just an exercise. I have 2 step 12s. Uh-oh. All right, Joel, we need to fix that typo on the money outflow. You could maybe do that right now too. All right, so that's what I just did. Step 13. Yep, we did that. All right, so let's talk about the correct way to do this. So how do you pay a bill with a check? Okay, so that's what we're going to do next. Money outflow, yes, 2 step 12s. All right, I think you can fix that, Joel, because you know how to go in and fix these. So That would be awesome. All right. So step 1, click plus new and select pay bills. Okay, the bill has already been entered. The bill is already in the system. So when I go to plus new and I say pay bills, there is my Diego's Road Warrior Body Shop right there, the bill. That's how it's in accounts payable. It's in that list because these are the bills that are that are out there. All right, let's see. I paid bills, steps 2 through 4. Okay, so now we're going to click the drop down and select checking as the payment account. So this right here, payment account, is currently set to MasterCard. We're going to change that to checking. When I do that, this new stuff shows up. Start the check number. You would put that in whatever it is. Okay. Check the box next to Diego's Road Warrior and enter $7.55 in the payment field. So right here. And actually that it already assumes that you are making that payment. Let's see, going back here, and then that's it. Click save and close. And this one, we're going to have to hit the green arrow. This schedule payments online, that is for if you are using Melio, which I have had a lot of requests to go over in one of these live streams using the third-party apps. And Melio is one of the few that I can actually show you. So make sure you post in the group if that's something that you want to see. All right. It's not on the survey. So that's our collection of suggestions. So make sure you post that. Okay. If that's something you want. All right. So we're going to hit save and close. And we are still on this. So I'm probably going to have to go back, save, close, steps 5 and 6. Now that we've done it correctly, let's take a look at the balance sheet one more time. And we're going to go back to report summary and let's see what happened. Okay. Notice what happened to the items in the balance sheet. The checking account balance went down by $7.55. That's exactly what's supposed to happen. And the accounts payable went down by also $7.55. That's what's supposed to happen because it's now showing that we have actually paid that bill. That bill is not included in that total anymore. Okay, accounts payable went down. The invoice has been paid, so it's no longer in this total. The total liabilities went down because Craig no longer owes. There's also a typo right there, Joel. Step 6, no longer owes Diego any money. That should be not apostrophe. Okay, and so here we are, and it's no longer a liability. So where are my total liabilities? So you can see right here, it added a 7 and a 6. It's no longer just 3s and 1s in that number. Okay, all right, that is it for the money outflow. What did I put in this note here? Note, oh, another way to pay the bill could have been by connecting the two like I just showed you. So that's something that you can play with, but we're not going to do that as part of this exercise. All right. What questions do you have for me about the money out workflow and the errors? Sorry, I missed how the bill got paid via QBO. So that was step step 1 here, right here, plus new pay bills, plus new pay bills. These are all your outstanding bills, and Diego's bill was in there. So we just added the amount right here. We'll say that we're paying Brosnahan here. So I checked it, and then the amount went to the Diego one.
Yeah, thanks, Margie. I was just, yeah, I noticed that. But is this the bill pay feature, which is the additional feature? I guess QuickBooks Essentials doesn't have it, but Plus has it. Am I right?
I think all of them have it. That's the schedule payments online, which I said we're not going to go over now. That's not how you would pay. I mean, I guess you could pay it with a check through Melio, but that's a third-party app that's integrated into QBO. And if you'd like me to go over that on a separate live stream,
Yeah.
I can, but that's, yeah.
Thanks.
So,
No,
but
I was talking about the
really
main.
good,
Yeah, sorry.
that's a really good point, though, is that marking it as paid does not mean that it's actually been paid. So that's different. But if you are putting the check number in here and you're printing the checks, who uses checks anymore? But anyway, this is how you would do it.
Yeah. Okay. But so the money will withdraw in 2 business days or whenever it will happen. But we are just taking care of the QuickBooks part of it, right?
Well, if you would still have to write a check, or I mean, what I just showed you
and send it to them.
Yeah. Process. You would still have to write the check and send it to them. Yes.
Right.
Yeah. This doesn't automatically send them a check unless you're using Melio, which is this.
Right. Okay. Okay. I understand.
Online.
Yeah. Thank you.
You're welcome. All right. Any other questions about money out workflows? No? All right, good. Whoop, one more. Let's see. Let's assume this is from Jenny. Let's assume he pays ACH versus check. Would you have a separate chart of accounts for ACH, or would you use checking as the payment account? It's still checking as the payment account. You don't have a separate account for how the money comes out of checking. So you would have, there's payment methods that are, let's see, if you're paying are you paying via ACH using Melio or using something else? Jenny, that's a question for you. I don't know how you would pay it with ACH unless you're using Melio. Hopefully. Oh, directly from the bank. Yeah, that's good. So that's interesting. So yeah, so you could just put that in, and if you're not printing the check, I don't think that it actually, it doesn't matter. It'll say that it's a check payment when you look at the history. So if I were to go back to this, I'm going to leave without saving. If I go back to my vendors and I pull up Diego's Road Warrior, see, it'll say right here, bill payment, and it'll say that it was a check. And it'll say it's a check even if it's not actually a check. It doesn't. I mean, I've seen that on my books before, and it doesn't really matter that it was a check. You could take off this check number easily if you didn't want the reference number there. If you were doing an ACH and you had like a confirmation number, you could put that in there if you wanted to. But yeah, it doesn't matter. So yeah, it could be an auto draft. If it's an auto draft, you're not going to use this bill payment feature. You would want to use a recurring transaction. You want to leave without saving? Yes. Okay. Top of mind next okay. So I was saying October 7th is going to be advanced level exercises. Don't be scared of them. And then October 14th, we'll have our next basic level exercises. And I will have closing the books and reconciling the bank statements back on the survey. So if you want to see those next time, then we'll make sure and cover them. So I'm so excited. I just am so thrilled that we decided to do this. And I just appreciate you guys. I love that I have the opportunity to share these exercises a new way and get you strengthened and confident.